Obviously, a lot to talk about. First of all, let's talk about that number that we just presented here, the exposure of the property sector on some of these banks. We've asked this before, but is this a manageable sort of risk for the lenders now?
Sure. Yeah. Hi. Thank you for inviting me. We estimated the banking sector has a total about around 88 trillion RMB exposure to the property sector. So as you mentioned, our loss estimate would be around more than $200 billion or 1.5 trillion RMB. It is manageable because the banking system has a lot of cushion to this. So the banking system makes about 7.4 trillion of revenue a year and 2.4 trillion after-tax profit. They also have about 6 trillion of NPL reserves on their balance sheet and 20 trillion of Tier 1 capital, core Tier 1 capital. So I think it's manageable at this point, but still it's going to hit the bank's earnings.
Okay, May, how much does China, I'm not sure if you have an estimate for this, how much does China need or the system need to complete all these apartments or unfinished projects? And how much of that do you think will eventually fall on the banking system to provide that financing?
Yeah, we actually did an estimate on that. So we expect roughly about 660 billion RMB will be needed to complete these stopped, unfinished projects. So we have seen the policy banks, the two policy banks, China Development Bank and Agricultural Development Bank, providing about 200 billion. So the other gap of about 460 billion will be coming from either another policy bank or the commercial banks. So some of these projects are not total losses. So we think there probably be around 20% or so still have some value. So the banks may try to use those projects first, and then eventually the large SOE banks or the policy banks will probably need to have some losses in these, but they need to do this to ensure the completion of the project.
May, okay, fine, all well and good, but isn't it just kicking the can down the road, a long road, because China's facing this huge demographic time bomb, and no population is declining as fast as this one. And also, we've got something like, some people are estimating 50 million empty homes. This is going to hurt in the long term. The chicken's bound to come to roost in a few years, surely.
Certainly, demographic changes will have significant impact on the housing demand. That's why I think the government, 2 years ago, started to pushing the deleveraging of the property sector, and then also we're seeing a dramatic decline in property sales now. Partly because of that, but also deleveraging as well at the developer side too. So. I think, we're having a more dramatic adjustment than what the government probably had expected. That's why all these potential problem and losses on the developers.
Mayan, the 16-point plan that we got just a week ago is really telling these lenders to continue to provide funding support for the property sector. Do you think banks will comply with this? And is it a good or bad thing for the sector, given that there might be a potential buildup of NPLs next year?
Sure, yeah. I think overall, net, I think it's a positive for the banking sector because, as mentioned, the banking sector has huge exposure to the property sector. And if situation continues to deteriorate, that might even evolve into a bigger loss or even some kind of a crisis. So at this stage, to stabilize, the property sector is critically important. But having said that, yes, the banks will be providing a lot of financing and, having all these, I mentioned the losses, 1.5 trillion, et cetera. But if we're assuming these losses are not taking in 1 year, then basically I think, averaging 3 years.